people are fearful for some reason.
People are fearful.
Would you fire Jerome Powell?
But I have to tell you, that's where you and I are going to disagree. If you look at how the stock market's been behaving away from the Mag 6, it has been saying there's a problem out there.
Trump or Biden? We've met before many times. The biggest thing that I just want to get out of the way first, because everybody on the internet is going to say, you already know, is how do we get people to stop trying to compare you to the benchmarks?
Right.
What are they missing? What do you say to those folks who are like, we believe in innovation, but we're frustrated? Mm-hmm. What would you say to them?
So believe me, I understand what they're saying, because the market has moved into such a moment of concentration we have never seen before. If you look back in history, the last time we saw this kind of concentration in the equity market in the US, broad equity market, was in the Great Depression in the 1929 to 1932 period. And this is a Goldman study, and the analysts took the highest valued stock in the market and compared it to the 75th percentile stock. And we've never been more concentrated.
Wow.
Never. What happened after, first of all, why did it happen back in the 1929 to 32 period? It was the Great Depression. The unemployment rate went to 25%. Real GDP dropped by almost 30%. And then wholesale and CPI pricing dropped 20 to 30%. So the question back then was, okay, it was a binary situation. Is this company going to survive or not? And it had to do with cash cushion, and cash flow. And so concentration. Doesn't that sound a little bit like today? Cash and cash flow. Cash is king.
Interesting.
Very interesting.
So these highly cash reserved companies, the Apples, the Microsoft, the Nvidias, with high cash flow, you're saying getting maybe a disproportionate level of capital allocation because people are fearful for some reason.
People are fearful. I don't know if you have picked it up, but I have sensed, and not just sensed, I'm looking at statistics where if you look at the NFIB, National Federation of Independent Business Sentiment, so this is small and medium businesses, the sentiment is as low as it was in 08, 09, near the bottom. They can't get funding. Yeah. You know, the liquidity is drying up out there. If you look at consumer sentiment, and I realize headline numbers are, employment's fine and inflation's a problem. We disagree with those, and we have lots of statistics to back this up. Consumer sentiment, if you're in the lower income range, they were hit hardest, of course, by inflation and interest rates and availability of credit. So their sentiment is back to near the lows in 08, 09. If you look at middle income now, this category is the biggest swing factor in terms of the economy moving one way or the other. Middle income sentiment, and this is measured by the University of Michigan, is capitulating and moving down. It's not as low as low income, but it's moving down. Even high income has tipped over. And one of the reasons is the unemployment rate is going up. It's gone from 3.4% in January of 23 to now 4%. And consumer savings, stimulus savings, they're done. The consumer saving rate is down to 3.6%. We haven't seen that since 08.
Wow.
So, I think when you peel the onion, and it is very interesting, the one variable out there that we're watching that does not seem consistent with this is spreads between corporate yields and treasuries, especially spreads between high yield bonds and treasuries. Those have just turned up. So, we see a lot of warning signs out there, a lot of fear and a lot of crowding into a certain ilk of stock that not only has cash and cash flow, but that people believe are going to win in this new AI game. Mm-hmm. And this is where we come down to this discussion. The Mag 6, Magnificent Six, everybody knows that expression. Many people, and many investors, analysts think that the data aggregators, which they are, who have centralized services, are going to be the big winners here from generative AI. And we think in the short term, there are going to be some interesting features and functionality. But if we're right, and AI is the most disruptive technology platform in history, then it is not going to be in the category of sustained innovation, which is what I just suggested. It is going to be truly disruptive. And the spoils are going to go to, we think, a different group of companies over time.
Not the incumbents, so to speak.
Not the incumbents. It is so interesting to be in an environment where the Federal Trade Commission is the most antitrust of my lifetime. I can't remember more of an antitrust focus, and yet this concentration is at record-breaking levels.
So it's almost like we might already be in this recession of the others.
Yes, and I think that's how the rest of the story plays out. And once the Fed understands that this economy is not on automatic pilot and sees inflation, I mean, I don't know if you've heard about the price wars now. We're seeing Target, Costco, Walmart. We're seeing McDonald's, Wendy's, even Starbucks has a new low-cost package. I didn't realize until my way here that Starbucks traffic in the first quarter dropped 7%. We're seeing, and what has happened, and the reason inflation has been a little sticky here, it came down from 9% to roughly 3%, kind of sticky here. Why is that? Companies are losing unit growth, and they're trying to make up with it by pricing more aggressively. And the consumer is saying, absolutely not. So now we're starting to see price wars. It reminds me, and I had the same battle in the early 80s. I was very young in my career, and Milton Friedman was saying, you know what? Inflation is stuck at double-digit rates. Get used to it. But we took the opposite tack there, and we entered an incredible period for active management. So what happened after 1932 at that peak? The market, now I did this rough back of the envelope. I'm putting out a paper and we'll get better numbers, but back of the envelope, the equity market rose 62% over the next 3 years. And it was disproportionately benefited small, mid, and anything other than the mega cap stocks. Wow. So it's not that the mega caps crashed. They didn't. They just didn't
stop growing.
They just had done their thing.
Wow.
And I really believe we're close to that here now.
So this is also very interesting on the price wars, because you do see these companies, restaurants, McDonald's, Starbucks, they're complaining about. It's not that people are rejecting the prices when they come, it's that they're just not coming anymore.
That's right. So
is this all screaming to us that the Fed has gone too far, and is there then a risk that the Fed's going to break something?
Yes. I mean, we thought in spring of 23 that the first rupture was the regional banks, and it was. And we got through that, and the Fed basically thought, okay, we did a good job. Yeah. No problem. And so the 22-fold increase in interest rates within little more than a year's time, I think history will judge that a very big mistake, because we do believe we're entering into a period of, the unit growth statistics are breaking down here, but then on top of that, you get prices falling. That's a very tough environment, and profit margins have started moving down. Companies which tried pricing, that's not working. Now they have to price down, And I do think we're going to see outright deflation. I've been saying this for some time. It's happening in slow motion, but it is happening.
It seems like now things that are just holding up are this old rental inflation or motor vehicle insurance or whatever, these sort of lagging categories anyway. So if we go into deflation, isn't that usually associated with a recession?
So it depends. So if the deflation is good deflation, so if you look at our technologies, so robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the life sciences space, all of those are highly deflationary. AI training costs, for example, are dropping 75% per year. AI inference costs are dropping 85% plus per year. There is going to be a lot of commoditization around AI, we think. But those are good price declines, because what does it mean? It's going to cause a boom in the unit growth of those technologies. Mm-hmm. This is where our strategies, we think, will prove out. You've had certainly the picks and shovels. Nvidia is the poster child, the prime beneficiary. But if Ross is right, I don't know if Ross is still here, and autonomous taxis.
Oh, okay. Thanks. Yeah.
Oh, okay. Yeah. If he's right and we don't get the autonomous taxi network that we are expecting during the next couple of years, then Nvidia should not be priced where it is, because the breakthroughs we're seeing in AI should enable robots to become better drivers than human beings within the next 2 years. Now, I will say, and Elon too has said, we expected that this would happen with fewer breakthroughs necessary in AI, but we think we've hit the tipping point now. And we can do the arithmetic saying, okay, now the machine will beat the human being. And oh, by the way, the human being is responsible for 85% of all traffic accidents anyway.
Of course. No, it's self-full. You have a Tesla. Full self-driving is amazing.
Yeah. It's amazing.
It's so incredible. And it really, this version 12, initially it had some quirks, but it's gotten very, very good. And remember, linked down below, you're going to find a link to meetkevin.com, where you can access the wonderful courses on building your wealth. You'll learn options, stocks, 0 to millionaire real estate investing, do-it-yourself property management, rental renovations, entrepreneurship, making YouTube content, social media, being a sales agent, you name it. Take a look at the programs on Building Your Wealth, linked down below, and we have an expiring coupon code linked below, so get in before that expiration. We'll see you soon. The price goes up over time, so every time there's an expiration, the price goes up, and that's guaranteed for you. So in other words, if for whatever reason you ever find the price is lower, we guarantee you price match for life. So we plan to keep the price going up. We'll see you there. We're always adding more value to make sure we're not just raising prices, but we're also adding a lot of value all the time and every day. This concept, though, of these AI costs dropping, there are two things I want to hit on here. First, I'm going to touch on the S-curve of AI, and then I'll come back to the AI cost dropping. I feel like when we had this GPT moment, we had this sort of explosion in popularized AI. Great, we've got a tutor now, we have a resource, we have a copywriter, we have a therapist. It feels like over the last year, we saw that innovation start stagnating or slow down. Is that because, and maybe I'm wrong, but is that potentially because we should expect the AI innovation to come in maybe waves? Like every 5 years, you get another sort of wave? Or are we waiting for those costs to come down? Are we waiting for those Nvidia chips to get installed so everybody, like the smaller companies, can actually really start using these and then innovating? And when does that come?
You're very perceptive. Let me finish the answer to the last question on a recession and then get to that AI question. You. So the good deflation will cause a boom in units. So we're talking about robots, we're talking about energy storage, especially with all the energy needs, power needs now. We're talking about AI, really permeating everything we do. So it'll cause a boom. That's a real growth boom in those. There will also be creative destruction, we think, caused by innovation. Our forecast is that electric vehicles will go from a little more than 10% share of sales globally, including China now, to 75% of sales in the next 5 to 7 years. What does that mean for the internal combustion engine? 90% of sales are ICE, gas-powered cars. Well, if electric vehicle prices drop into the $18,000 to $20,000 range, what are they going to do? They will have to price down, but then they will lose money. So that's creative destruction, and that's the bad side of deflation. The cyclical side, in terms of recession, I think we've been in a rolling recession. Housing, by some metrics, we got housing starts numbers that are down 50% by some measures. So housing starts, auto sales have been punk. They haven't gotten back to typical expansion territory, even for a mature industry, and commercial, both office and multifamily, now we think are in recession. So we've had a rolling recession. This is not going to be like 08, 09, boom, and down. We have one more leg of this, and we think it is the consumer, and that then the Fed will respond quickly. And, many people say the Fed's not political, this is an election year. I don't think it will be political. It will be clear as day. The unemployment rate's going up. Capital spending is coming down. Pricing is surprising on the low side of expectations. And we've already gotten a few of those reports. But there's also a lot of confusion. And the Fed is not acknowledging what I've just said.
I think they could just cut rates on a Sunday instantly and it'll solve all ills.
But what happens typically, if interest rates and prices are going to come down, what are you going to do?
Wait.
You're going to wait. That's why we get a recession.
Yeah.
That's why we get a recession. Now, back to AI. You're really perceptive. Most people do not understand what you just said, which is there's kind of a hiatus here. What is that? So I remember in the early days of the internet, we had a ChatGPT-like moment in 1993, the first time that email was connected to the internet. That was what? And then Cisco went nuts. It had already done very well. 1 year later, so we're about there. 1 year later, Cisco fell 55%. Why? Because, and I think this is happening now, strategic decision makers in companies understand what an important moment this is, and we agree with it. And they're also assessing the risks. They're chief risk officers. Hallucinations. Are we putting this into our finance department? Are we putting this into our HR with all that healthcare data? Where are we going to apply this? Anything mission critical? We were talking to the CEO of Anthropic, one of the companies in our venture fund, and he said, what is happening right now is at the periphery. We can all write emails and haikus better, right? We can. I know our head of sales in Europe is getting married and writing a poem for each guest, right? This is great. He's not paying anything for it, right? It's just something fun to do. Dario, the CEO of Anthropic, said it's going to take at least 2 years for the core of companies to be truly impacted, because these strategic decision makers have to assess how much are we going to pay, how much risk are we going to take, what risks are we taking. There's another thing that's happening, and Palantir has told us this. So Palantir helps set companies up to capitalize, to harness AI and capitalize upon some of the amazing things that are going to be possible. It says, and we're doing a pilot with Palantir, that companies first have to gather all the data from far-flung places. They don't even know where some of their data resides. They have to aggregate it, clean it up, integrate it. They have to map out workflows in their organization in much more excruciating detail today. This all takes time.
I think they said in an earnings call, Palantir, that only, I think it was 10 or 20% of data, I believe it was 10, only 10% of company data that exists out there is actually AI ready.
Yes. Yes. And so that is one of the most important companies to make that. Now, it is expensive. It is expensive. One of the myths about ARC, I think that this period has diffused, especially when it comes to Nvidia, is that we will just throw money at anything that walks, talks, looks like innovation. Just not true. As we saw Nvidia scaling, and we had 100-fold increase in it. We went from 4 to nearly 400 on the old stock. What would that be? So that would be 4 to 40 now. We still own it in many of our specialized portfolios, but we were saying, wait a minute, if Nvidia is going to keep going, companies have to benefit, or else it shouldn't keep going. And I do think at 30, it's somewhere between 25 and 30 times this year's estimated sales and 40 times EBITDA, there's a lot of good news. There's a lot of good news baked in. And what is not baked in at all is the possibility, and we've just talked about it, of a cyclical decline. Nvidia historically has been one of the most cyclical companies in the semiconductor space.
Computer refreshes. Yeah, absolutely. So that's interesting. So there's this signal that I was looking at, and I wanted your opinion on it, that Amazon delayed some of their H100 orders because they're going to wait for NVIDIA's next chip. Tesla sent some of their H100s to XAI because they have enough, whatever the reason is.
Yeah.
To me, it's starting to sound like companies are saying, okay, we got enough for now. And so at some point, it seems like data center pricing is going to come down, that deflation in data centers. When that happens, the break-even cost on these chips will expand, which means it's less desirable to buy the chips. So the chip prices have to come down. Then the margins come down at Nvidia.
That would be cyclical. So one of the, again, having been in the markets for more than 40 years, when I hear the word shortage, ever, I start thinking, and I do have an economics background, I start thinking, okay, shortage means human nature, double ordering, triple ordering, quadruple ordering. And you saw your Tesla observation is right on. I found it very interesting that 2 to 3 earnings quarters ago, Elon said on one of the earnings calls, these AI chips, Nvidia is so good, it's so hard. I mean, I think we're going to get there, but it's hard and it's going to take a long time. And what do you know? He got all the Nvidia chips he wanted, then even more than he needed, sent them off to XAI. And I don't know if you noticed this, but just announced about 6-7 weeks ago that it has started production of the new Dojo chip. So, Dojo, the competition will be Dojo, all the hyperscalers, and NVIDIA's client base is very concentrated. Their cloud margins are lower than NVIDIA's margins. And I am sure they're going to say at some point, there's something wrong with that picture. They're and they're all designing their own chips.
Yeah.
And then, of course, you've got Tesla designing its own more special purpose chip.
Why do you think Elon called Dojo sort of if I remember the phrase correctly, it was sort of a high risk, the phrase wasn't YOLO that he used, but it almost sounded like he was making a bet and he didn't think it had a lot of success in one of the prior earnings calls. Why do you think he would water down Dojo?
Because he wanted NVIDIA's GPUs? No, honestly, that is what I think
There's
happened.
a manipulation. Oh, yeah, don't worry about Dojo. Give us your chips.
So
He is a shyster.
If you
brilliant.
listen,
He's brilliant.
If you listen to the shareholder the shareholder meeting that Elon just had, he did say, he said he was ramping on Dojo, had all the admiration for Nvidia, something like that, all the respect for Nvidia, but I think he thinks he can do this.
So what do you think about companies, this is brilliant, by the way, thank you for that. What do you think about companies like Apple and the on-device, basically AI, where Apple's going to use their own chips for at least inference, compute? Is there a risk that on-device AI hurts a company like Nvidia?
Yeah, if we're right and this is truly disruptive innovation, I think what you'll see from Apple is, a tiptoeing into, generative AI, very interesting features, functionality, but very limited compared to what we think other companies are going to be doing out there, because of their own data security and privacy. Almost they've created a barrier to entry in a way, but they may have also created with that barrier to entry, which has benefited them so far, an inability to harness AI tools in the most amazing ways they're going to be harnessed. So it was interesting in surveying people after WWDC. Some people said, oh, okay, I feel safe. They're not going to do anything crazy. So that was kind of what I just said.
Interesting.
And yet, those of us who think AI is truly disruptive are looking for, okay, where is the disruptor to AI? Where is that company that's going to enable, full-blown AI on mobile in a way that Apple just cannot do?
That the incumbents will be too fearful of actually deploying. Interesting. Okay, so now with AI costs dropping rapidly, and you mentioned power needs, a lot of folks have been speculating that energy plays or where it's at, because these data centers are going to 10x the power usage or whatever that we need. So get into utilities or whatever else. Is it possible that, as we heard with the Blackwell chip, it can do 4x the compute with half the energy, that we won't actually see energy use go up at all, despite the fact that we'll have a lot more innovation, a lot more AI chip usage?
I think the other thing that is happening, because it does take 2.5 to 3 years now to get an interconnect to the grid. And we do think meta platforms, and if you look at the macro numbers out there, data center, or in industrial production, the closest we can get to data center production, has tripled. No, I think it's gone up tenfold in 3 years. Meta, when Mark Zuckerberg made the pivot from metaverse to AI and just really studied what he would need, I think he locked up incredible amounts of power supply. Others are being forced to go offshore into other areas where, the power is plentiful. It may not be as stable, so they'll have to bring generators with them and so forth. So there will be a workaround. But I just look at anything up tenfold in 3 years and I say, okay, how are we going to absorb all of this?
I see. That's a really good point. Okay. What about, you mentioned that you think EVs, or you're projecting that EVs are going to be 75% of the market in 5 to 7 years. So what happens when you have, let's say, a Trump presidency who seems to be highly anti-EV?
It's so interesting to see Elon Musk and former President Trump cozying up to one another again, isn't it? And I actually think, if you think, in terms of Tesla becoming the marquee auto manufacturer here in the U.S., I think he'll rally around that. Trump he's very practical.
It's a great insight. I love how you have this view of Elon. He's like, he's doing that for a reason. He's not a knucklehead. He's doing it for... So why does he send all these political tweets? Do you have a rationalization for that?
I think Elon has learned that no publicity is bad publicity, and he's just out there effectively advertising himself and therefore his cars.
Brilliant answer. Thank you. Now I want to buy more Tesla stock now. Dang it, Cathie. Okay, very well. So you touched on the next leg being a consumer recession in this rolling recession. Isn't there a risk then for another stock crash, or how do you feel about it? Hedging. Do you short Bitcoin as a hedge? If you look at how the stock market's been behaving away from the Mag 6, it has been saying there's a problem out there. Mm-hmm. That's the first thing. So I think this might be a little bit more like the 1932 example, because it was still a tough environment back then. But the extreme, the concentration had gotten to such an extreme that when interest rates and inflation came down, because that was a problem back then, and we were on the gold standard. So they had to shrink the money supply. We have been shrinking the money supply this time as well. They had to shrink the money supply. It was a vicious recession. And the recovery wasn't a boom. So believe it or not, I think the environment is a little bit similar now in terms of interest rates coming down, inflation coming down, being the reason the market broadens out. Do I think we could have a correction in the market, 5 to 10%? I'd be foolish to say no. I would say that our portfolios have acted, because cash and cash cushion have been really the most important variables. Algorithms account for more than 75% of trading out there. They are very simple-minded, I think, and this has been why we've seen the concentration in the market. If you get algorithms basically flipping the reason they just move towards cash and cash cushion, that should benefit our strategy. That is what happened during COVID. We were hit severely. The market in 1 month going into COVID was down 25 to 30%, depending on the measure. We were down 46%. Then we went into the craziest period I've had in my career, as everybody knows. I felt very uncomfortable at the end of that. Late 20, early 21, we were just getting inflows hand over fist. And I just knew that was going to end badly. And I said, keep your powder dry on Bloomberg in an hour-long show. So I wasn't with Eric Schatzker, you may know him. And I knew it would. Today, we're in exactly the opposite situation. We're now at rock bottom with our multi-omics really dragging down the flagship. Why? Because it is the platform earliest in its evolution. Although our genomics or multi-omics portfolio has 4.5 years of cash runway, market cap weighted, it doesn't matter. It's relative to everything out there, especially the Mag 6. They can't possibly compare. So I think, we're seeing outflows, and I think that's a mistake now too. I feel like just as bad about that, people selling at these levels, as I felt about people buying in late 20 and early 21. It's interesting. So really, it's innovation is on sale at this point.
I'll give you our chosen metric is enterprise value to EBITDA. So enterprise value, the entire cap structure, EBITDA, avoiding games, financial engineering games with EPS.
Yeah.
So
adjusted EPS.
Yeah.
Add back all the stock comp. It's not an expense.
But I have to tell you, that's where you and I are going to disagree.
Oh.
In innovation, it's critically important to have all the employees aligned. I see it with my own company. We give everyone stock.
Oh, I love stock comp. I think stock comp is great.
Yeah.
I just think I'm more piggybacking off you suggesting financial engineering that you get in the EPS figures and how they adjust them.
Well, we adjust them for SBC, both S&P and us. If you use that, our way of adjusting, and this will come out in the paper, the S&P 500 today is at almost 21 times. Mm-hmm. ARC is a little above 25 times. That is the narrowest I've ever seen in my career.
Oh, wow.
So for us, because our companies are investing now, they're investing so that they can capitalize on these exponential growth opportunities. And so they're foregoing short-term profitability. And even so, that gap is very narrow by historical standards.
So even if we have this increase in joblessness, this forced cutting from the Federal Reserve, is sort of your thought that innovative companies have hit a bottom, that there's not much more we can go down? If you look
at our strategies, the one worst hit has been, we call it the genomic revolution because it's 10 years old. Today it'd be the multi-omics revolution, and it's basing, it's basing at levels basically not higher than when we launched the fund nearly 10 years ago.
Oh, wow.
So yes, and that of course has dragged the flagship down because we have allocated more toward that space. Let me give you an example of how we're thinking about this. So in the portfolio, in the top 10, is a company called CRISPR Therapeutics. CRISPR Therapeutics is curing 2 diseases right now, beta thalassemia and sickle cell disease. Now, that word cure is a strong word. Compliance is very careful around it. So just to give you an example of what's going on and how little we're paying for it now, the first person in the beta thalassemia trial went before his genome was edited, and all they did was edit one programming error in his genome once. That was it. Before that happened, he used to have to go into the hospital 17 times per year on an emergency basis for blood transfusions, or he would die.
More than once a month?
Yes.
Terrible.
It was terrible. He has not gone once since. He's cured. And many people know about Victoria Gray. She went on PBS. No one knew she was going to do this, no one conducting the trial. And she just said after a year, on the same basis, I'm cured. I can't believe it. Okay, so we have now that we can sequence the human genome, 6 billion bits of code in your genome. Now that we can sequence it, we can figure out what's gone wrong.
There's a lot that's gone wrong.
Where the programming errors are. And as we age, we get more and more programming errors. Now that we know, and now that it's cheap enough, $200 to $500 to sequence your genome, as opposed to $2.3 billion 20 years ago, now that we can say that's a programming error, and here is a gene editing therapy to edit it. And CRISPR is working on diabetes. And if Sam Kulkarni, the CEO, thinks diabetes is possible, I do. Guess what we're paying for that company today? It reminds me of Amazon in 2003, which is when we were buying it. And we were the only ones in my firm, Alliance Bernstein at the time, buying it. It was a $5 billion cap. This is a new platform company, as is Intelia, also in the portfolio.
And I think you've Invitae still?
Invitae, unfortunately, went bust.
Oh, I didn't know that.
It did. It did. So we
went through surrogacy. We actually used Invitae testing.
I know. And so it's so unbelievable. That's how horrific this market has been for that ilk of stock, because Invitae, had some of the most important data on diseases in the world, including epilepsy. It worked with huge numbers of organizations. We often say that our portfolios are the closest you'll find to a venture capital portfolio in the public equity markets. We do not mean that we're small cap. In fact, we're all cap. But we do mean that these companies, there's a possibility that some will fail. There just is. Very rare, but it does happen. And that shouldn't have happened in this AI age. Some companies out there are picking up those assets for pennies on the dollar. But that's the short-sightedness of the equity markets right now.
Sure. I mean, that'll happen to 23andMe probably as well.
I don't know. We've never owned that one. We didn't, just doing the research on it, we didn't think it was going to be a successful long-term player.
Yeah, I think I talked to Brett about that, years ago. And I think that was the thing, is that it wasn't innovative enough in the genomic space.
I'll tell you, on Nvidia, when we did this study, which was when it did go bust, it still was the third largest contributor to our performance since inception, which is roughly 10% CAGR since inception. And that's because you take profits when you have a crazy time like 2020.
21, yeah. Mm-hmm. So where do the GLP-1s fit in on this? I mean, we know that's not genomics,
right? But
I want to hear your take on them.
Sure. It's wonderful. It's the old way of drug discovery, and it's a very powerful one. So if we're right, and CRISPR did I mention it's a $5 billion cap? $5 billion. If they're going for diabetes, think about what that means down the road. A cure for diabetes means that GLPs are cosmetic drugs, right? Now, who's going to reimburse those? They cost $1,000 a month. I know a lot of people on them. They look great. But if it's just for cosmetic use and it remains at this price, then I think the market will be much, much smaller. People won't be able to afford that. However, if they cut the prices and there is competition moving into this space,
generics and otherwise,
generics, but there are fakes out there that these companies, Novo Nordisk and Lilly, are going after because they're fakes and they charge much lower prices. So they're already seeing some of those issues.
Oh, really interesting. Okay, that's fascinating. So then Donald Trump, going back to Trump, says he wants to fire Jerome Powell. Would you fire Jerome Powell?
Let's see what they do as the evidence comes through here.
Okay.
If
he still has a chance not to be fired by Cathie.
Well, I think the whole Fed is an issue.
I'll fire everyone. Or just close the business.
This takes us to blockchain and Bitcoin and everything. Can we go there just for a second?
Please, absolutely. Yeah. It's perfect.
So Art Laffer, who was my mentor in college, many of you may know him, Laffer curve, supply side economics.
Every time I've met you, you've brought up Art.
Because I owe him so much. He got me my first job at Capital Group when I was in his class. I was still in college. So that's how I got into this career. But not just for that reason. I think he's brilliant. And we asked him to collaborate with us on our first Bitcoin paper in 2015. Now, Bitcoin was around $200 at that time. And so he read the paper and he said, oh my goodness, this is what I've been waiting for since we closed the gold window in 1971.
Wow.
He said, this is a global, decentralized, no human intervention, rules-based monetary system. The first one in history. This is a very big idea. Private money. We're going back to private money, he said. This is fantastic. What he means is the Fed changed the world and we moved into, government-controlled, money printing. And I don't think the dollar is going to disappear. I think the strong currencies are going to get stronger. A lot of emerging market currencies are going to disappear because their citizens are going to start buying insurance policies against the corrupt regimes or ill-advised regimes out there. And so we'll see what happens. The dollar will be competing with Bitcoin, which will be great.
That is interesting. Yeah, so I'm going to throw a counter at you. So we know that governments love fiat because they can create more. Obviously, that creates inflation. But if we're in a deflationary environment, they can essentially freely print money because now you're creating stable inflation at, say, 2%, right? And now the government can strengthen its power, its spending, its giving, and continue to collect votes as a result of that. Well, I think what I've described is just very traditionally what the system is. Mm-hmm. By going to Bitcoin, while that is very pure, it removes all that government power. And I don't know if government wants that.
I think we've passed the biggest risk. I think the brilliance of Bitcoin has been how surreptitious it has been. You know, how it has scaled, how we do now have in the United States, 55, 60 million people who own it. It has become an election year issue. When we
got a crypto president running now, apparently.
Yeah, exactly. So what happened there? So you had I think what brought more Democrats along to vote for FIT, so Financial Innovation Technology 21st Century Act, FIT 21, 76 Democrats. Shocking. What brought them along, what I think were three things that Trump announced. Number one, he was going to accept campaign donations in crypto, Bitcoin. Number two, he was going to protect the right for self-custody of crypto assets, critically important to the community. And number three, there was another one that he...
no central bank digital currency?
No central bank digital currency, but that wasn't going to happen anyway. We live in Florida. Governor DeSantis, this is a states' rights issue. Governor DeSantis said, no way will we allow a CBDC into our state. Mm-hmm. If you have states like Florida and Texas and others who are not going to accept a CBDC, it's not going to happen.
Okay.
So I think we've passed the point of highest risk there on government policy. And you notice when China shut down effectively Bitcoin, now it's curious, they shut it down, but they didn't rule holding it illegal. They just said no one could ever buy it again, right? Yeah. I think a lot of them hold it, right? But when they shut down Bitcoin effectively, it went elsewhere. You can't shut it down. There's no no throat to choke.
Right. I guess the thesis isn't trying to kill or eliminate Bitcoin. It's instead that if the thesis is you can replace central banks around the world with crypto, then you've essentially stripped substantial power of governments around the world, which is probably the right thing to do. And then you have a much more transparent system. But the loss of power would be tremendous of politicians, and so that's why I just don't see large economic powers ever adopting it until their currencies fail.
Exactly.
When their currencies fail, which they all do, they all fail.
But that's happening now. The Egyptian pound, many people don't know this, dropped 40% in March.
You got Javier Milei in Argentina.
Milei in Argentina. You have Nigeria, the Naira, down 50% in the last year. Yeah. Think about it. Those people have their purchasing power and wealth in those currencies. They're thinking a little more carefully about, I need an insurance policy here.
Interesting.
And I was just in El Salvador, had the opportunity and privilege to meet President Bukele, who is centering his success now. Yep. Now that he's gotten rid of the gangs effectively, and I can tell you I felt pretty safe there.
Donald Trump said they sent them all here.
So on Bitcoin and AI, he's really smart. If you're a leader and that economy is only $30 billion, Nvidia is a $3.3 trillion company, right? Yeah. $30 billion country. Harnessing two of the most important technologies out there. putting in place, and I went there with Art Laffer actually, who is now consulting with El Salvador and helping them. That's his giving back in this world. He feels very strongly about it. This will increase El Salvador's standing in the world. I think its economy could go up tenfold under Bukele's 5-year term, just because of those two technologies.
You're being built on trust and real innovation versus
transparency and appreciation of reserves, some of which are in Bitcoin now, and not seeing a run on the bank. You have the appreciating currency, not the depreciating currency. Now they're already tied to the dollar, so
Okay, so crazy follow-up, and then I'll stop on the government topic. I tried running for governor against Gavin Newsom. I can't stand him. Sorry, but I just believe that these systems will do anything to stay alive. So the follow-up thesis: what happens? El Salvador starts growing. Everything's great. It's a system based on trust. People have their insurance policy, investments in Bitcoin. Then they elect somebody promising big spending, who creates a central bank, and you go right back to it.
I think the bet here is he's betting on a virtuous cycle. Why would you want to go back to that? Why?
Okay.
Why?
That's a good point.
And in terms of how are we going to break down,
government?
break the
Gavin Newsom
chokehold on I think young people are our hope, as they always are. I really do, and I think that's where we're seeing Bitcoin becoming an election year issue. And who would have thought? I mean, everybody thought by now we'd have a CBDC.
That's true,
right?
JP Morgan was working with the Fed for years already.
There you go. And yes, so it's been fascinating.
Young people today, on that topic, what should they do to succeed, to become financially free? Is this a matter of picking a better job, picking a better career, a better license? What do you say to folks who come and you say, look, I want to invest more, but I need more capital to invest more? What do you say? What should I tell my 7 children? I've got a lot of call options on what's going to happen in the future.
Congratulations on yes. Well, first of all, one of the things I feel passionate about is making sure that from an educational point of view, we guide students towards, where the world's going. And
you're doing that in St. Pete.
Yes, in St. Pete, our research made age appropriate for middle school is the science curriculum for all of Pinellas County. That's public schools. And we're agnostic, public, private, charter.
Your company is running the science curriculum of an entire middle school county.
We with educators, we hired, it's called ARC Education Initiative.
Yeah, ARC Education.
Yeah. Thank you. Thank you. Yes, and Florida has always had to try harder because its educational system was considered so bad, had such a bad reputation.
That's why I'm broken.
So starting with education, getting them on the right side of change is really important. And then as they make their way, getting out of college, this is where you take your risks. And if you're on the right side of change, read our research. What is the right side of change? Consider the source. I mean, this is all we do, but what do we think is the right side of change? And start leaning in that direction, finding companies that you think are going to harness these technologies, or even starting them. I waited till I was 57 to start a company. I think if I were growing up today, I'd start one much sooner. But if you are going into a company and you are just getting out of college, what I always say is you have one foot in the new world already, and your boss does not, especially from a technology point of view. Your role in this new job is to make your boss look brilliant. Make your boss look brilliant. And with these new technologies, help the company with these technologies. And then if they're not going to give you the breaks that you feel you deserve after serving well, then move on to something else.
I like how you said that, after serving well. It seems like sometimes, and I've brought this up as well, it's sometimes there's this impression of like, people say entitlement almost, and then and that it sometimes hurts people. It sets them back because they're expecting, and so they're trying less hard. It sounds like you're saying try hard first and provide
Definitely.
Yeah.
And you'll get further so much faster if you do that. And it doesn't necessarily mean in one company, you know. You may have a great boss, but there is nothing, like there is a dead end, not your boss's fault, you know, it's the bureaucracy. Then on to the next thing.
On to the next. Interesting. So you think the true AI, that was a phrase you used, true AI spoils will go to the smaller companies that could be nimble and innovative. What's our present time horizon for that? What do you think for those next S-curves?
I think they're happening now. I mean, there's the VC world is funding all kinds of AI startups, many of which will go bust. They just will, because they're features. They're not true operating systems.
Interesting.
Right? A lot of those companies. And
there was a whole piece, I think it was in Barron's or Financial Times, where Stable Diffusion, which was one of the unicorns of 2023, is now apparently running into cash issues, and funding collapse.
Yeah, and a Reid Hoffman-sponsored company, Inflection, had to really turn into an acqui-hire by Microsoft. Now, they're not talking a lot about these, but you know, I think the amount of capital just running headlong into this space, inevitably, some of it's going to be misplaced.
Yeah, of course.
And, you know, OpenAI, Anthropic, we're really excited by what they're doing and how fast they're moving. We just got Claude 3.5. I've forgotten there are 3 flavors. It's the middle one. And, you know, it's now beating GPT-4o. And so the race is on. We're looking at Meta, but we're looking at companies that are also going to be spun out and, you know, leveraging upon some of the things that these companies are doing.
I see. Okay, so they're happening now, so now's the time to find them. That's what you're looking for, essentially. How do we know that, like, how do you identify what is actually going to be a true system rather than just another feature, as you've mentioned? I mean, now we can apparently, with Apple, make custom emojis with AI.
Yeah.
But where's the profit from that? The Financial Times did a piece on a $2 trillion investment into AI is leading to what, a $2 billion increase in revenues. So where's the money?
Yeah, no. And Sequoia just came out and said, wait a minute, 60 billion in VC, and I think that's an underestimate, it might be dated, has been invested in generative AI. And really we're seeing 3.5 billion in revenue. So there's a disconnect, and there's going to be a tremendous amount of commoditization. Our research suggests, and this is how hardware and software have worked together over the years, and maybe even that's going to change. We have to be open to thinking about that change. Is that the companies that are able, generative AI companies that are able to sell their effective software into companies who are going to increase their productivity by 4 to 5-fold by the end of the decade, they're going to be willing to pay 10% of that increased productivity to those companies. So we are looking at who is helping. Now, it was interesting to see OpenAI. It moved, ChatGPT went from 0 to 100 million in 2 months, fastest ever, right? Well advertised. What's not well advertised? Since then, it has leveled off, or it did level off. Why did that happen? It leveled off around 200 million. Why did that happen? Well, they were charging $20 or $30 a month, depending on if it was enterprise or consumer, $20 a month. We're getting into a tougher economy. Even at ARC, I've said, like, we're spending $20 on all kinds of experimental out there in large language models. Even I'm saying, okay, are we looking at what we're not using anymore and shutting that expense down? So that may be what happened and why they dropped the charge and now have gone to a freemium service. So start out free, and now they're growing very rapidly again. So free is very important to populate, and then we'll see. It's also becoming apparent that if the consumer-facing side of this is going to have to be advertising-driven, because consumers, especially young people, they're just not going to pay for these things, right? So advertising, and then that brings in the whole other, okay, who does that take from? Does it take from, the meta platforms, or Amazon is getting a lot more from advertising, certainly Google. Google, we think, is at great risk from an advertising point of view. So, there are going to be puts and takes, and, we're watching carefully.
Linking this together, the AI discussion with what you mentioned about Elon, I can't help but think back to when lithium prices were sky high. He said on an earnings call, boy, if you just want to print money, get into mining lithium.
Exactly, because he wanted people to get into mining lithium.
And now the prices have collapsed.
They have collapsed.
And so it's cheaper for him to make cars.
Of course. Of course.
And so that's along the same logic or character, so to speak. We're not saying it's bad. It's strategic. 4D chess is what it is. Of, Dojo, that's not a big deal. But Nvidia, it's all manipulation, which is important for him to succeed and for his businesses.
He gave kudos to NVIDIA. He does give kudos to NVIDIA. Many people forget that Tesla pulled an NVIDIA chip out of its own cars. I think it was 4 years.
2016 or so.
Was it? Well, the specs came out in 2018. They were talking about it before that, but the specs came out in 2018. They pulled it out, I think, in 2019. And that's when this idea, wait a minute, some of these hyperscalers, and I would put Tesla into that category, they're going to create their own chips.
So does that also mean it's potentially easier for other automakers to compete with Tesla on an FSD point of view if now these chips are getting so much better, or people are making their own chips, as you just mentioned? Is it possible that Tesla's moat is actually shrinking?
It's gotten bigger. Because the moat is data. These other companies, Google, it has 1,000 cars collecting data. Tesla has 5 million, 6 million cars collecting data around the world.
Brief counter to that, NVIDIA's pitch in their Orin or Thor or whatever, their slideshows they do for their Drive platform, is that we don't actually need that much data anymore. They're trying to counter that to sell Nvidia, obviously, because we can take data from fewer vehicles and then run simulations.
Don't think so. You need real world driving data to figure out the corner cases that simulations have never seen.
Okay. Okay, that's a good point. Okay. So increasing moat. Now, Ross, who was just here before you, is really into this AI company. I don't like them, but I wanted to hear and I told him that, but I wanted to hear your opinion on the innovation at Dell.
It's quite old world, and they're trying to insinuate themselves into the new world, and good for them. I'm looking at all of these old world companies, HP and Dell and so forth. It tends not to be where we look, but I understand why value managers look at those companies, because there is a growth dynamic that they're going to be able to harness here. It's not the kind of growth it's not disruptive innovation. They will play a role. It won't be longer term a very highly valued role. That's our point of view. But I think it is a good value investor kind of stock.
Got it. Okay. Different strategy. That was a very diplomatic way to answer that question. So you mentioned that there's a chance the Fed is going to be a bit political. Do you think we're getting cuts before the election?
What I meant by what I said is, it won't even be, if we're right, it will be much clearer that they need to cut in September. Now, we'll see. We're getting close to that. Because that's the relevant. In the old days, in the early days of my career, you generally would not get a rate cut after June because it would have been considered too political. So that's where this all comes from. But if we're right at how quickly the inflation does start to crack here, and I do think the consumer just saying no mas is a big reason, because they have to. They can't. They're done in terms of.
That is interesting. Why would the Fed, just this last Fed meeting, Jerome Powell doubled down on the way we measure rental inflation? Owner's equivalent rents, which we know are 18 months lagged. Why? And he addressed it. He said, look, we know other people question our data, but it's what we use and we're not changing it. He doubled down on sticking with this antiquated measure of rent inflation. If we measured our inflation today the way the Europeans do, harmonized indices, we would have already been at 2% inflation for 9 months.
Yes.
Why are they so stubborn?
I think, so if you look, and I'm going to put this chart in the piece that I'm writing. So if you look at the 10-year Treasury bond yield, for the last 45 years, you'll see, early days of my career, the peak at almost 16% in 1981, and a consistent downtrend. Sure, we had cycles around the downtrend, but this downtrend, the 10-year Treasury broke. We're at a higher high. I mean, yes, a higher high. It was 3%. That was the high in 2018. Now we got to 5% October of last year. And the Fed is basically looking at that as a message. There's inflation in there, and it's 2.4, 2.5 if you disaggregate it. Right. But it is one of the big reasons. So I think that's part of what has gone on here. Now, if I'm looking at the same metric, what I think is going to happen, given the way we see the world, is that inflation actually will start falling by many measures, and meaning not just inflation, prices will start falling, but growth will surprise to the upside because of the productivity gains associated with AI and all of these new platforms. Wow. That is going to be very confusing to the Fed.
A productivity boom, which could have already started. You generally don't see it until years down the road, and then it's been happening.
Yes.
Wow, that's very interesting. So I have this thesis that in 10 years, I've been saying that for a couple of years now, so by 2032, 33, somewhere in that range, the 30-year mortgage will actually be under 2%. Mostly because I think we're going to return to trend, the exact trend that you were just talking about, and that deflationary forces will become so strong that we'll basically be in a situation of Europe. That's a thesis I have. I'm going to ask you about it. The Federal Reserve just updated their dot plot and suggested that the longer run neutral rate might be 2.7 or 2.8. They keep moving this up from 2.5. These are... My thesis does not align with that, and I want to see which side do you lean on.
So if you look at economic history, you try and identify a time like this one with so much innovation, which, if it's technologically enabled, is deflationary. It just is. You have to go back to the early 1900s now, and the late 1800s. What happened, and we did this study, it's hard to get these numbers, you'll find that the yield curve was inverted more than half of the time that inflation was extremely low, and that long bond yields, I don't know what the exact number was, but they're much lower than I think people would have expected. What you also saw in the world of private money pre-Fed were a lot of booms and busts. But they were quick. They were quick. The inefficiencies, it's not like now building up to an 08, 09 over many, many, many years, right? Building up tech and telecom bubble for many, many years.
It was like a tulip bubble.
Right.
Fast.
Right. So there was real price stability. So to the extent that long bond yields take that into account, I think, to me, 2 and 2.7%, I don't know, but I think the surprise will be on the low side of expectations.
Interesting. Okay. So surprise to us. Do you think before COVID, Europe was worried about negative rates. You had negative rates. I think in Germany, you had negative rates on savings.
Yes.
Will the U.S. go there?
I don't think so.
Okay.
I don't think so.
Not that bad.
No.
Not bad. No, you don't like Germany?
No,
I'm kidding.
No,
I was born in Germany. Sorry.
No, I think Europe has a lot of problems. It's very interesting in this world of innovation to hear a Palantir say we're pulling as many employees as we can out of Europe and into the U.S. because they are just not going to allow AI to flourish there. And so we are not going to play ball.
Just a switch of topics here, and then we're gonna do. I think we're gonna have Ross chat. We'll jump in in a few minutes, and then we'll do some Q&A. But I want to ask you, what's your take on immigration from an economic point of view? There's this belief that right now it's actually, even though immigration costs, I tweeted this stat, I'm going to mess it up, but it was something like an estimate from the CBO that immigration might cost us $600 billion, but it might generate multi-trillions of dollars in potential GDP. Something like this. I'd have to find my tweet. But anyway, point is, what's from an economic point of view, it seems like politicians sort of are incentivized to leave holes in the border. It keeps job numbers up. It keeps the economy going. Of course, it's very politically unpopular. What do you see, or where do you see immigration going from an economic point of view, and how could it affect us?
So I have two personal stories on this. Both of my parents immigrated from Ireland. And this nation was built on the backs of immigrants, as we know.
Pretty sure there's an Irishman in here somewhere, is he? There he is.
All right. And love to know where. Kerry and Donegal, both of my parents. Dublin. Okay, got it. So the second is we are hiring immigrants, and because they really want to work for ARC, and lots of other people will not hire them because they will not go through the visa process because it's
a nightmare.
It's a nightmare. Yeah. So
we just marry everybody. And they get citizens. It's amazing.
I think the Supreme Court just ruled that that's not going to give them citizenship anymore.
We better start marrying faster.
Anyway, I think that just came out this week.
Oh no!
Anyway,
our strategy is foiled.
So we're going to we're going to advocate for legal immigrants, especially those who are educated here, want to stay here desperately, and are being forced to go home when we can harness that talent. So that's the first thing. I think immigration, legal immigration, is a good thing. I really do. I do think it's the DNA of our country, and of course, my parents moved here because it was the land of opportunity, and my father was drafted right away, so they never depended on the government at all, and more so the government depended on them because my father went into the Air Force. So I don't know how controversial that is. I think legal immigration should be stepped up, actually.
I love that. I completely agree. That's wonderful. Okay, two sort of rapid fire ones. They might be very quick. And then maybe we can, in the meantime, set up that mic stand right here, because then maybe Ross can ask a few questions from here. And then that way other people can line up behind him too. So that way we have a good flow of questions coming. I think that would be ideal. So the two rapid fire questions in the meantime. Volker or Powell? Whom do you respect more?
Volker.
Trump or Biden?
Is it? The word is, so as I've said to my children, so I have 2 girls and a boy, and they're split on this. As I've said to them, look, I am going to vote for the person who's going to do the best job for our economy. I am a voter when it comes to economics. And on that basis, Trump. I mean, So Art Laffer describes the first 3 years of the Trump presidency as the best in U.S. economic history. Not the last one because of COVID, and I would agree.
Wow.
And I went through Reaganomics too. That was,
Thank you for that.
Hey, Cathie. Great to obviously be here with you. I know you've been talking about AI and disruption before. It was like the cool kid in town forever now. So my question, I guess, is I can think of breaking AI into 3 segments. One being like the big boy chips, which is like the Blackwell, so Nvidia is a big beneficiary of that. Then the edge AI chips, which could be Apple on device, right? All that stuff, which requires a lot of marrying of the hardware and software. So Apple could be a big beneficiary there. Then the third is where like the application, B2C, B2B, like, or medicine, data aggregators, right? A lot of industries that can open up the use of AI. So my question to you based on that is, where do you think the small caps can actually disrupt out of those 3? So
in terms of the 3, it's going to be on the application side. And when we say small caps, I don't mean exclusively small caps. I mean, if you look at OpenAI, it's a large cap now, right? And so some companies coming through the private world are going to be the big winners. So, and yet, it's interesting. We're just constantly scouring and asking questions about AI as we are in the earliest. People do not understand how early this is. This is Internet 1992, right?
Oh, that's when I was born.
There you go. And so such early days. So honestly, I have to tell you, we're asking that question ourselves. One of the things we think we're beginning to understand is that the most disrupted part is of the tech ecosystem today might be software as a service. Now, and we've been watching like Salesforce. It's had Einstein for a very long time, and yet it is not seeing the pull through yet
it sucks.
To activate. That's what some people say about Salesforce. And there will be a better way. That's the thing. The disruptive part about AI is everything that you hate about Salesforce.com, because a lot of people use it but hate it. Generative AI can turn that around.
See, that's really interesting, because Mark Benioff should be somebody who should be able to drive the innovation, but for whatever reason, it doesn't seem like they are. And so you're saying those smaller companies are going to be a lot better positioned to be disruptors because they have to be.
They have to be, and maybe Mark will buy them, because that has been his history.
Okay.
And they have been good assimilators of technology acquisitions. But I don't know if they're too much from the old world. We look at the way we're looking at the stack. You've got infrastructure as a service, platform as a service, and software as a service. Software as a service is going to be, the barriers to entry with generative AI come down dramatically. And if software developers are going to be We don't know how much more productive. The numbers so far are astounding at this early age. If you know your engineers are going to become 10 times more productive now, why are you going to outsource what you know what you need better than the one size fits all? So just in terms of how we're thinking about where the disruption is going to lie, but I also think the smaller cap innovators are going to be looking at companies like a Salesforce and others who are going to need to change the dynamics within their companies. And so those are the companies we're looking for.
Thank you so much.
Yeah,
Thanks.
All right, next question.
Hey, Cathie, thank you so much for being here, sharing your time with us today.
Pleasure.
That was a good lead into my question. Talking about those smaller cap innovators and the more agile companies almost having an advantage now that the cat's kind of out of the bag with the LLMs and open source, some more of that stuff. How does that affect your investing thesis and strategy, and what companies or areas you focus on? And kind of, Kevin, something you talk about a lot is there's so many of the software is so easy to iterate on. There's so many of these and so many are going to fail. So I know you prefer more of the hardware play on the AI side. So I'd love to hear kind of from both of you about how that plays into your strategies.
Sure. We're very focused on Meta and Llama 3 open source. It's a brilliant strategy because Meta is mostly a consumer-facing company. I know it's trying to change with WhatsApp and so forth, but so it's consumer-facing. But Llama 3 is really built for enterprises, right? And so by open sourcing, all of these software developers are dedicated to that platform, making it better, and then Meta takes it back inside and builds its own more specialized models on top. So we think what they're doing is amazing, and we're also really trying to focus on will Meta and Llama cause more commoditization in the AI space, because they can. That people do not appreciate right now. So definitely trying to focus on that. And to the extent you say hardware, and I just want to anticipate what you're going to say, Kevin, I think you said it. Someone has to benefit from this. If Sequoia's numbers, I think I said earlier, 60 billion versus 3.5 billion. Okay, we have to have some good payback periods here if the hardware is going to continue benefiting, right? And AI is moving so fast, the costs are just collapsing so quickly that there should be, but if more of this is commoditized than we know, then it's going to back up into the hardware side of the ecosystem as well. 100%.
I think hardware is likely peaking in pricing. I actually think you just started the blow off the top of Nvidia, frankly. I think there's an end to investing in AI hardware that's reasonable if somebody was looking to make a trade. Not personalized advice, but Apple makes me very interested. I love the practical uses of that. We didn't touch on that, but I have so many photos and videos of my children from travel and vacation, and just that, at least what they're saying we can do, that I could ask Siri to make me a video of my vacation and put all this together like this. That's practical AI to me. That kind of software as a service I like. I think Palantir's an innovator. I was actually surprised at how well Adobe and how quickly Adobe started integrating into Photoshop. I just signed up for their $4.99 a month PDF reader version. It's actually better than some of the other sort of startup versions that I've seen. So I guess we'll see. Yeah. Okay, next. Thank you for your question. We have a "Don't Sue Me, Bro" shirt.
So happy you're here.
Let's hear it.
What do you think blockchain stocks and crypto?
What do I think of blockchain stocks and crypto generally? Well, we're very excited about crypto assets, so Bitcoin, Ether, Solana. Now, these are not stocks. When people are talking about crypto and stocks, They're either talking about the miners. We're not invested in the miners. We tend to stay away from highly cyclical, commoditized businesses. Now, they do have a data center play, but we still think it's a kind of a boom-bust world. So we're not there. Our derivative plays, well, there's one name that I'm not supposed to be selling our funds directly, but we're very proud that ARKB, our spot Bitcoin ETF, has done so well, and so many people are getting access to Bitcoin because we think it's a real monetary revolution. So we think that's important. You can play that in the stock market. Other companies like Coinbase and Square or Block, which owns Cash App, which is getting very creative with Bitcoin and the rest of the world especially, is interesting. Robinhood is now, it wants to become a digital wallet. So when we're looking, our choice is to look for those companies that are going to give us a digital wallet, because we're not going to have many digital wallets. It's a little bit like credit cards. We don't want too many credit cards.
Yeah.
We would just...
And now Robinhood is having a credit card.
Yeah, oh yeah.
I think the Vlad guy is pretty smart.
Yes,
I
yes,
just
yes, he
Yeah.
is. And then the other one was crypto, and what was it? Or blockchain?
I mean, the directionality of Bitcoin. And
We think we're just at the beginning. Even though we got our first exposure to Bitcoin when it was $250 in 2015, now at $64,000, I think it is, 65,000. We think it has miles to go. Because we think it's a new monetary system, and many people are going to adopt it around the world because it's going to prevent inflation from taking away purchasing power and destroying wealth. How's that? Was that a little too complicated?
No, that was a great answer. Thank you for that question. Follow on that. If you were worried about a short-term recession and you wanted a trade, how evil is it to short Bitcoin just in the short term, because you don't have to worry about an earnings season or whatever? It's really in the short term a risk asset.
Well, the interesting thing we learned about Bitcoin during the regional bank meltdown in 2023 is it became a risk-off asset. It was, people were saying, wait a minute, maybe I need this little insurance policy here because this banking thing's happening, and maybe we're all going down again. And
is that was because rates plummeted, though?
So people are trying to dissect that, but the regional banks kept going down. Bitcoin went up before the NASDAQ did, but just by days. Okay. But still, it was one of the first. It was one of the first to, and that was pretty soon after. Sam Bankman-Fried went down.
Yeah, tell me about it.
So that was interesting. It really was wow, this is not just a risk-on asset. It could be a risk-off asset. It's an insurance policy against counterparty risk.
Fair point. Great question. Thank you so much. Let's try, just because we're going to be bumping up to the VIP dinner here soon, let's try maybe some rapid fire. So maybe just like super quick, and let's knock through a few more questions, and then maybe we'll wrap it up here in a few minutes.
All right.
Yeah.
Hi, Cathie. Hi, Kevin. I recently read Elon Musk's biography to better understand investing in Tesla. Brilliant man, somewhat tormented, but in his own words, he even said, I shoot myself in the foot so often, I should invest in Kevlar boots. When he says something like that, I'm wondering, what kind of guardrails are there to protect us investors from his natural tendency? I mean, I love the man, but I'm kind of like, and Kevin, I think sometimes you're frustrated by some of the things he does as well. So I'm just kind of curious on your take.
Yeah, and I've had the privilege of meeting him and the team around him, which is really important. So I think, and Robin Denholm, chair. So learning about the people around him.
Robin's great. I met her at the shareholder meeting last year.
She is amazing, very solid, very objective, very, and so having met him, I I feel like I know him in a way. He cares so much about humanity. It's a big weight on his shoulder to save us from ourselves environmentally, and whether it's prevent censorship or whatever. He is a very good person, and I realize he says crazy things, and he is a little Trump-like in some ways, because what I say to our investors, I watch what he does from a technology point of view. He is so laser focused, more than any CEO. And the other thing he has going for him that I don't think very many CEOs have going is he's a maestro of the convergence among technologies that is taking place in this technology revolution. Robotaxis or autonomous taxi networks are, the convergence of robots, energy storage, and AI. Most people, when they think of a company like Tesla, they think of autos.
Sure.
He wasn't thinking that way at all. And I think he's capitalizing on, the convergence among technologies, and will continue to do so in a way that is going to surprise people, I think. So for my own, we have to, of course, do our due diligence and make sure that, that the management is strong and intact and has the right kind of incentives and all of that. I think a lot of what he has done and been rewarded for is this thought that no publicity is bad publicity. And so it gets everybody talking and up in arms, but he says what he really thinks.
Yeah, fair.
There's conviction there. So again, we just have to, and we regularly have calls with the management team around more so than Elon. Right? But we do meet with Elon from time to time. I don't like to meet with CEOs too often, just because we need to keep objectivity, and really the business people around him, who are executing, have to have their leadership,
Like
and he's
Martin,
a real
maybe,
leader.
from Investor Relations. Martin, I know he just left, but
Yes.
he was always a good
Oh, he
person
was
to talk to.
wonderful.
Yeah. What do you think he's going to announce Robotaxi Day 8/8?
I don't know. I think part of the reason he put that date on the calendar was to motivate the employees inside, saying, we're doing this, and, we got to get through this problem and this problem and this problem and this problem by that date. So it'll be very interesting to see what he does announce.
We went from, we have nothing, but we are announcing it.
Well, I think, no. I think they actually have something because of the moves that they've made.
Okay.
So unboxed manufacturing means producing human-driven and robotaxis in the same plant, getting rid of the assembly line, reimagining manufacturing. And that tells me he wouldn't be doing that unless they were getting close. But more important is the craziness around firing all the charging network people. That decision was, I think, another indication that they're closer to robotaxis. The distribution of charging networks, they were trying to fill in all the, they're getting all complaints. But if Tesla is going to be the robotaxi or the autonomous taxi platform, it will locate the charging stations in very different places because it will have control over all of this than it would right now. So I think that's what happened there. Whenever he realized, oh my gosh, yes, we're doing this. That means we have to do this on charging. You'll see a little bit of drama.
Great, thanks.
Yeah, thank you.
Wow.
Yeah.
This is so, every time there's a bearish thought I have about Tesla, you take it away.
Oh,
Yeah.
Thank you.
Yeah. Thank you.
Okay.
It's good perspective. Thank you. That's why we love you.
yeah.
Thank you.
Thank you.
Next question.
Cathie, your vision for the future is very heartening, and it's nice to see as a contrast to all the doomerism out there about AI and stuff like that. So appreciate that. My question is that there's kind of the old story. If you came to 2024 or 2020 from 1904, you'd probably try to invest in the auto industry, but if you did that, you'd lose 90% because most of the companies failed.
Yes.
You talked about like small caps. What names in small caps are making AI products that provide real value, like to the large and mega caps that you were talking about, and kind of what specific insights and tasks do you see AI performing that increase productivity for large companies?
Sure. So in our private fund, we have a company called Shield AI, which I think some of the most powerful AI applications are going to be in the defense space, and they will be serving very large companies. So we feel very strongly about that because the government, and we know this from Palantir, is very focused on what it does not know. We've seen a huge step up, and being in Florida, where SOCOM is located, we're seeing an incredible interest in helping to finance small companies that will help us with national security and our defense. Those, I would say, I feel very strongly about. Now, of course, what could happen, and this is a risk in our style of investing, is that our companies will be bought out. And we would like them to stay pure play for as long as possible, because what happens is in a buyout, these companies can be swallowed by big bureaucracies and suffocated. So that's sort of the tension that we're playing with right now. In terms of AI, just more generally, whenever we go into if you look at most of the stocks in our portfolio, we are going into our quarterly calls with them with AI first questions. And the most important ones are around their proprietary data. That is the secret sauce in this new world, and how to harness it. So again, very early days. And I'll tell you, we've made some missteps, Teladoc being one of them. It has some of the best data in the country. Not only it has some genomics data, it has electronic health records, it has contacts with physicians and hospitals and insurance and all of that. And yet this world is moving so fast that if you don't have a CEO who is running hard and understands how to harness AI, they're going to be, we have brainstorm every Friday, and this last Friday, one of the contributors to our brainstorm she said, I think a lot of companies are going to lose their way here because they're not moving fast enough. And so that's our biggest risk. Yes.
Okay, we might not be able to get to all of these questions, but let's go for one more here, and then maybe what I'll do is let me consolidate the questions that you have. I'm going to ask you each for them really quickly after this question, and then I'll try to put them together for everyone, so that way at least you can get a thought in before we get kicked out, since we are 22 minutes overdue, and I'm going to get in trouble. I already am. So go ahead with your question.
How do you maintain a strong conviction when the market doesn't necessarily agree with your forecast? I'd appreciate if you could answer based on a personal level, how you deal with that personally, and how often you reevaluate your thesis as new information presents itself, and from the perspective of the shareholders as well, when they might be comparing your performance to the S&P.
Yes. Okay, so how do we deal with underperformance when the market turns against our style? So research is, central to what we do. And some of you may know this, but Wright's law, trying to figure out learning curve, cost declines, and so forth, understanding how quickly something's going to change. So research is how we orient ourselves. We have a top-down, sizing the market. Then we have to find the companies. And we're very early in a lot of these platforms. And so there are going to be some hits and misses. And the market does not like uncertainty, especially when cash is king. Right? Cash is king. Our companies are going to be cash hungry as they're investing. So I think that's more of what we've been through recently. Of course, we all have our misses. This earnings season was pretty difficult. And then we go back and we say, okay, is our thesis behind this company based on where it sits in this particular technology? Are we wrong? Are we wrong? If we are, we will sell. Now, one of the good things that has happened, not that great things have happened this year, after, recovering quite nicely last year, here we are again down this year. But it has given us the opportunity to rotate out of names where we are losing confidence because they're not moving quickly enough. Personally, how do I deal with this? I really do believe truth wins out, and I've been in many cycles where we have looked wrong for a number of years, and we start basing, which is where we are right now. We're basing in our portfolios for the past 2 to 3 years, just a long base, and even though we had a horrible earnings quarter, we did not break that base. So that has given us some reassurance that the market, what has happened recently is this shift towards a very short-term time horizon, this quarter, next quarter, cash cushion, that shift has been very harmful to our strategies. We're not going to change our style for that reason. But we are going to rotate around, take losses in something and move into something else that is depressed also, but in which our conviction is higher. So this moment, yes, it's been difficult. Research keeps us focused, and we have a scoring system. The scoring system keeps us disciplined and forces us to. Wait, he's taking it away.
No, you can keep going. Go ahead.
Okay. So the scoring system. I think he was going to ask another question.
Oh, so do you have a go? Just shout it really quickly. What's the follow-up? No, you're cutting Tesla out.
No, they cut Tesla out, and I was happy about that.
Yeah.
I didn't think that Tesla belonged in the Mag 6 because it should be investing aggressively. It should not be a cash cow, and it should be pricing down in order to sell cars because it can. It's still profitable. So I never liked the categorization. I didn't think it was the same kind of stock at all. Mm-hmm. And I thought Mag 6 that people understood. No.
Yeah. No.
They're beginning to understand. It's Tesla, not Nvidia.
Yeah.
Okay.
So what we're going to do now, just before I get kicked out by Rio, is quick rapid fire. So I'm going to consolidate some of these questions that were asked. There are ETFs that offer dividends on Bitcoin. ARK-B is a spot ETF.
Yes.
Why might one pick one over the other?
Dividends on...
I think they're like BITOs offering like yields or whatever.
Oh, I know.
Option strategies they're building into there, I think.
Yes. Okay, so no, we're just pure play...
Spot
Bitcoin, easy and inexpensive access. It's a public good. We're not going to make it any more complicated than that.
Fair. Ads at Tesla, would it actually make a difference? When I was at the shareholder meeting last year, Elon suggested he would try advertising in response to my question. Mm-hmm. It seems like they've tried it. Are they trying enough?
Again, that is a business decision. I think they get a lot of publicity. If people are thinking about an electric vehicle and are curious and want to compare vehicles, Tesla will sell itself.
Deal. How worried are you about BRICS?
BRICS, B-R-I-C-S,
Brazil,
now
Russia, India, China,
and it's expanding.
Yep, it is. It doubled in size this year. Yeah.
Mm-hmm. If you're asking, is this going to cause more of a geopolitical divide? I'm looking at the countries in Asia are doing this because they kind of have to.
Sure. Yeah.
They're playing both sides of the fence, and I'm not going to say I'm not worried about geopolitics, but I'm much more focused on China exporting deflation as a risk.
Fair. How big of a deal is the federal debt?
So I went through this in the early 80s because it ballooned then. It was huge. It was a big controversy. And the best way to deal with it is not to tax our way out, but to definitely limit spending. But even on that, is to grow our way out so that the debt to GDP, and I think that's going to happen because I think productivity growth is going to boom here, and GDP growth is going to be so much, real GDP is going to be so much more buoyant than a lot of people expect.
Incredible. If somebody's in trucking today, do they need to be worried about losing their job because of AI?
Autonomous trucking.
Yeah.
Yeah, we're invested in our private fund in a few of the autonomous trucking companies, which are AI plays. You know, again, everything's an AI play to us these days. It's going to be a very long-term transition. I think for trucking, it'll be faster. We think for EVs. Okay. Most people think the opposite, but you know, we're dealing with extremely conservative companies. There's a big union dynamic there. Demographics are such that there are huge shortages, so that's going to force it at the margin. And I think losing jobs, that's, you know, they'll probably want to retire by that time.
Last question. Are we paying enough attention to the space race against, say, China or Russia?
I think thanks to the partnership between SpaceX is really driving this. The government's playing ball. There's a very respectful relationship there. I think that's been a part of the increased sensitivity, meaning Elon is influencing whether it's space or defense, with the AI discussion. So I think that's partnership is working. We're so much better off than we were.
Everyone, Cathie Wood.
Yeah, thank you. Thank you.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than Househack, nor am I presently acting as a market maker. Make sure if you're considering investing in Househack to always read the PPM at househack.com.